Okay. Now this is only a portion of a coaching session that I give to, I guess, either newbies or people who want a little refresher or kind of a boot camp on what they want. There's about 100 slides in the presentation. I'm going to show you about 30 of them because it'll take us 2 or 3 hours to do the presentation to give you an idea, especially when I found out that some of the people were kind of in need of some basics for candlesticks. I'm going to start out, but these are my favorites. Now, there are dozens or hundreds of candlesticks out there. However, the vast majority of them are not really great setups. And by that I mean what are good tradable setups. These are the ones that I have found, the 5 plus the J-hook, that tend to work best for me. Now, I'm pretty much a long trader, just like Rick. I will use leverage ETFs to go to the short side. I'm going to use options. But these are candlestick patterns that work in both directions. And I'll basically go over there, and then I can help you identify the trend, and then we'll have any questions and answers at the back end. Okay, I keep trying to hit the page button. All right, I want to let you know that these work on all time frames. They work from the 15-minute chart all the way up to the weekly. I haven't really tried them much on the monthly, but we'll go from there. So the J-hook, or pullback opportunity, normally I like to use a morning star after the pullback to curl up, and I'll show you that. I'll show you the hammer and the shooting star pair. Morning star, and the opposite of that was the evening star. There's a doji and a gap up, which is usually a reversal of trend or continuation pattern. I'll talk about the dojis, I'll talk about continuation patterns, and I'll talk about the bullish, bearish, engulfing. The rest of them, okay, I don't find maybe that, let's put it this way. With these 1, 2, 3, 4, 5, 6 pairs of setups, I get more than enough opportunities. And I can get really good at those by specializing. Okay, before I begin to talk about the patterns, I want to help you understand what you're going to see on the charts by telling you what my chart is set up. I use candlesticks. They're open and closed. They're in the direction of, so the green is an up close for the day. Over, in a direction. EMAs, I use the 3, the 8, the 17, and the 34. The SMAs use the 50, 100, and 200, and I'll talk about why I use the 100. I have the volatility stop on there, and I use stochastics RSI. And talking about the stochastics RSI is a whole separate presentation. I'm probably not going to go into that much. This is a busy chart, but we can zoom in on it, and the solid blue line here is the 50-day simple moving average. The 200 is off the charts to the top. The dashed green line that you came to is the 100. Obviously, the green dots are the vol stop underneath, and the red dots are the vol stop above. The 3, I believe, is hidden here. Sorry about that. I got it with it hidden. And the 8 is the 3 is probably the 3 is the orange dash line, the one that's zigzagging with price. The 8 is the light blue line here, the T line. And the 17 is, it's a number that I found that is much more sensitive to the 20 simple. And I like it because a lot of times, like in this case when the stock is down, it will revert to the mean. It'll revert probably and more normally to the 17 exponential moving average. So when I've got a downtrend established, and if I can get the 3 over the 8 and over the 17, I've got a trend going. Okay, so before I proceed on any more with those, do we have any questions on my charts? Because I want everybody to understand what they're about to see. All right, we seem to be okay, so let's press on. The first one in my most favorite pattern is the J-hook. Because I like to go long, I like to have an upward trend followed by a pullback, followed by the hook up, and that little blue line you see here is the J-hook. It's basically a fish hook. All right. It's a strong move up, followed by a gentle pullback, and I look for candles that show a possible change in the trend, the reversal of the trend from down back to up. I'm looking for dojis, hammers, bullish engulfs. All the ones you're going to talk about before are combined into this, but I'm looking for right at the bottom of that curl up. And the stronger the sign, and I buy on a sign of strength. So I'm not going to just try to anticipate it. I'll even use my stochastics RSI to help at the bottom to see if the momentum is coming in. Let's see an example of that. A recent example is ICHR. It did a four-day or 5-day pullback, move up. Then it did a pullback that was less than 50%. These orange lines here are the quad lines from TC2000. And I put those, I could have put up Fibonacci's and then a Fibonacci expansion. I'm not trying to keep it simple. I'm a pretty simple guy. And these Fibonacci retracements, what I use them for, if you pull back to about the 25% level, it can't go back any further than that. That's stronger than loose breath. That means you're probably going sideways in a consolidation and you're going to explode to the upside. The other thing that happens here is that the 50% level is between the 50% and the 25%. You probably have high odds, and I'm not going to put a number on it, but high odds that it's going to break out. If you go below that 50% level and you hit to the 66 or 0.618, but about the 2/3 retracement level, your best bet is probably only a retest of the string high. These are what I've discovered in my trading. And of course, if you do 100% retrace, I'm not even going to touch it. All right. So this one obviously did the bounce. The green arrow here shows where I got above the prior two doji candles. I combine those two doji candles and I go above the highest of that and go long. And then we gapped up over, and that's really strong. They gapped up and kept moving over the $28.50 level. And I have that on there because in a larger trend chart over to the left, there was a resistance level and it gapped up to it and kept running of it partly because it had high short interest. And when the bulls took it over that level, the shorts had to start to cover. All right, let's go to the next one. Another one is HCC. Nice gentle move up. So it had a fairly decent move up, about $4 on a $20 stock. That's pretty good. And it did about a 50% retracement. And then it went to gentle move up and probably about a 1-to-1. It went up to say $22.50 to $23. It's not bad. In fact, it went up much higher if we stayed with it for the whole move and didn't get shaken out. But I'll probably see a lot of people who will take these and then get out at the first sign of weakness. What I want to point out here at the bottom, my stochastics RSI is starting to curl up at the same time I get a candlestick. Candlesticks and price are the primary and secondary indicators for me. I use stochastics RSI to confirm and the momentum is coming back in. I can also look at momentum by looking at volume. I will point out over here on about the 5th of August, we had a bullish kicker. We had the down day, and then followed by a gap up above all recent highs. That's a bullish kicker. It's very strong. Okay, let's go to the hammer and hanging man. This pair, the hammer is at the bottom of a downtrend. Hammer's in the middle of an uptrend or is really a hanging man, but in the middle, either one of these in the middle of some not taken in context with the prior trend, they're meaningless. Candlesticks, almost all candlesticks need at least 3 candles. The candle before, the candle that we're looking at, in confirmation the period after. I say period because they can be used on something other than a daily. But if I say daily, I really mean period. So if you're on this period, the hammer is at the end of a downtrend. It needs to be at least 2 or 3 candles down. Then hit the hammer, and what happens is price goes all the way to the bottom, and the bulls come charging in. Now, it'd be nice if this hammer was a green candle or positive candle from the open, but it's not required. It's just psychologically better. And where you go long is you buy over the top of that high. How far? You're going to have to figure that one out because it's basically TLAR. That looks about right. Now, the hanging man's at the top of the trend, and confirmation is lower than the following period or day, and it could signify a change in trend. So what do? I buy on a sign of strength and sell a sign of weakness. The sign of strength here is it continues to go up on the hammer, and on the hanging man, it continues to go down. All right. Here's ABAX, ABAX, back in May, approximately the 17th. I have it circled here that there's the hammer, and it's dark and filled in, which means that the open was higher where the close was, but I said it didn't matter. And then we have really a combination of a bullish engulf over the body and a move up over the hammer. So that's pretty darn good because it basically opened and it swallowed up all of that prior day's body. Now, some people would say I'm going to need more confirmation than that. I go, okay. Now, where do I put the stop? Well, I can put the stop as low as this candle here around $46. I could also use the stop below the low of the day where I got in because it opened approximately where yesterday was, went down a bit, and then came up. If it goes back down to that low, I probably don't want to be in it. So therefore, I used the closer of the two, either the low of the day before or the low of the candle that brought me in. That's a personal preference. It's up to you to how you do it. I don't mind having to get back in. Notice my stochastics RSI is coming up from the bottom. That's a tertiary or secondary indicator that is probably going to work, even though it's a little sloppy over here to the left. And ultimately, it got up to that level that it was at a prior level, which happens to be $50, and also the 50-day moving average. And then it pulled back and then continued to go higher. That one was a little bit difficult. Here's a current example of a hanging man. We had a fairly healthy move in July up to the end of July where we had the hanging man, where it opened higher, went down, and then closed back up. And some people would say, oh, wait a minute, that's bullish. It closed higher. Well, not exactly. It's because there were people who were willing to sell down to this level below yesterday's candle. And it could be bullish if we get follow through to the upside the following day, but we did not. And do not be fooled with a green candle or an up day the following day that's even lower than the hanging man. Some people get pulled up and they see a green day and a downtrend and think that that's positive. It is not. All right. Inverted hammer, shooting star. Inverted hammer is at the end of a downtrend. And some people will say that that's got to be bearish because it closed lower. No, the same thing as we were talking about before with the hanging man is that there were people willing to pay all the way up here to the top of the day. And so therefore, if we get follow through the next day, that is probably a good indication that we're going to get at least a near-term, short-term reversal. Conversely, if we have an uptrend going and we get the shooting star, and then we get the confirmation in the next couple of days where it's below that, probably going lower. Robin is asking, on the hammer or hanging man, are these considerations such before the next candle forms lower? Well, that depends upon how aggressive you want to be as a trader. I would say the answer is no. But the candlestick's going to need 3 candles. It's going to need the one before, the one we're talking about, and the one after, one or more after, to give you confirmation. And when we get to that, I want to say it was INAP. I'm going to bring up the INAP chart. We're going to talk about that again. If I don't cover it well enough, ask me again, please. So at the end of a downtrend, again, it's in context of where we are. We buy and sell on the sign of strength or weakness. Above the body, below the body is what I usually use. Do I have to let it get to the top of the candle or the wick? I don't. I don't let it get to the top of the wick. That's just giving way too much. Because if it goes up there and then comes right back down, it goes below the body of that inverted hammer, I don't want to be in it. Oh yeah, it'll be just a second. Here's ETP. There's the inverted hammer. And then we started up the next day. I probably wouldn't necessarily use the body since it was so thin, but I'd probably use the bottom of the candle of the prior day, and we can go. Let's pick out INAP. Here we go. Hope you're there, Robin. It was up. It was up for a few days, but it was, up and down. We had an inside day a couple of days before. Then we had this shooting star up here. It didn't get confirmation either way, in my opinion, on the 11th because it was kind of an indecision. Dojis are a sign of indecision. Does not know where it wants to go. So therefore, this one would be a non-counter day. What did count was the following day when we started open lower. This one, a shooting star, hanging man, dark cloud cover, those are ones, evening star, those are ones that give me pause to not go long. Now, you could potentially go long if it starts to go higher. Now, this would actually probably fake you out. On the 11th, somewhere in the day, it was going higher. Unfortunately, at the end of the day, it basically closed the same, but it opened, probably went lower, probably went higher, and then pulled back, or it went open higher, then lower, and closed. Depending upon which that did while we watch what's going on. Did it probably, if it opened higher and then went down to a lower and then closed right here flat, that's negative to me. Because that means that it could not hold the higher prices. Higher prices were being rejected by sellers. So you have to figure out, this is a doji, I would have to drill down to an intraday chart to figure out what went on, unless I was watching it during the day. My guess is that it opened, and why don't we see about INAP? Let's see what it did on the 11th. Well, okay, move to the left. There was the doji. It went higher and then started to close and then pulled back up. So it did pretty much what I expected it to do. that it, sorry, you guys couldn't see that because I didn't put it on the chart. So here we go. There's the 11th. I'm on a 15-minute chart. We opened up, went to the high of approximately 532, then pull back. I will tell you, I do not go long on any stock without looking at a 5 or a 15-minute opening range. There's no way INAP would have gotten me long, even though it gapped up here, because it started to pull back immediately. If I can't take out the 5-minute high, it's not going higher. The 15-minute, it didn't really take us long in any of that. On the daily chart, we probably couldn't have told. But by watching it during the day, we would not have gone long on the 11th at all. Okay, let's go back to the slides. Here we go. Let's go to the next one. Morning star, evening star pair. Morning star is at the bottom of a downtrend. What it basically is a doji or a near doji, and I use both of them the same. It basically is a narrow body candle. Doesn't have to, it could have wicks above and below, but basically has to have a fairly narrow body. It can be a doji, it can be a near doji. Top, same thing. The evening star is at the top of an uptrend. You can find lots of things, the evening stars in the middle of, I'll call it trash, where it's chopping around, or morning star in the middle of chop. But unless it has a trend before, it's not, to me, going to be, Al, you ask what seems to be like it's 50-50. Was that on the INAP chart? Make sure we are talking the same. And INAP on the 5-minute chart, I'm not going to go long unless it can take out the highs. Okay, I'll continue. Okay, let's take a gander then at the. So INAP was one of the daily trade ideas. Is that correct? And it's a trade idea, not necessarily a recommendation. All right. On this day right there, let's see what happened. I'm going to drill down to only a 15-minute chart because it actually went up on the 10th. I don't like the way they shrunk that. Let's look at the 5-minute chart. There's the 11th, and there's the 10th. Okay, it opened up higher. It went above the 5-minute and ran to about $5.50. But the problem is on the 5-minute chart, if that's where I'm entering, I got a shooting star there at $5.50. Let me go back to the daily because we were using the 5-minute just to enter. Now let's look at a weekly chart on INAP and let's see if there's anything over here to the left that could have given us pause. There's an overlap. I'm going to move over here so I can zoom in. There's an overlap of these two candles here between, where did it open? It opened at $5.42, and there's the top high was 564, and the low over here was 575. So let's take 564. So somewhere in there between 564, 575, that's going to be kind of no man's land for me. It's going to be an area of resistance because if I drill down to a 60-minute chart or 30 or whatever, there was an overlap there. Those tend to act as resistance. What did it do? on our day, let's go back to the daily. It got up into that no man's land. It got up to a high of 559. This actually should be 575. Okay. And when I look at a 15-minute chart, I move back to the 10th. We got up to that 550 level, 559, and then started to pull back. What did we see on the daily? We saw it go up to here. We saw it pulling back. It's still okay on that day, but it's giving me the yellow caution light. The yellow flag is waving like crazy saying, something ain't exactly right. This thing probably should have kept on going. But it went up to a resistance level and finished with a shooting star. But how many candles do we need? 1, 2, 3. We need to know the following day or two, where is it going to go? We had this move the following day, the 11th, and it could not follow through. Okay, hold on. Okay. So what happened here? It basically has failed. But has it really failed? On the 11th, it didn't go below, well, it did go below the day before. So let me move this over. That was the day it was recommended. And if people got in it, I can understand why they wouldn't have gotten out. That's okay. Now, I don't know what you're using for a stop. If some people are using the volatility stop down at $4.70, I can understand that. You have to make sure you share size appropriately that you can take that much of a loss if you really want it. We're going to get into it. Or you could say, well, I'm in it and I don't like it if it gets below $5. It's whatever you decide. You have to come up with that plan. Now it's starting to pull back. To me, that third day, the second day afterwards, it's a sign that it's probably pulling back, even though it's on lower volume and even though the BOP, the balance of power, is green. I don't like the price action. I'm probably out. If I ever got in and gave it a little bit of idea, stop was 465, okay. But I have mine a little higher. Let's see what happens the next day. 488, it still hasn't taken out the stop. If you're using what Eric said, the stop was 465. Now, if you're getting in, let's just say that you got in at 515 or so, 465, you're giving it 50 cents. So that's 50 cents on a $5 stock. That's 10%. I'm going, oh my goodness gracious sakes alive. Not sure I do that. Now you understand why my stop's a little tighter. You go to the weekly. Your targets are going to have to be up here in the 750s to kind of make it, $7 to make it work. If you're 515, you have to give it at least $1. You're going to have to get 615, 7. You're going to have to pop up to the top of these candles. Just different ways of trading. I don't know that a 465 would be where I would put it. And that's probably why he asked about that. An aggressive stop. I mean, it's pulling back to the top of these candles over here. And this candle over here, let's look at that. That's probably under $4.75. That level there, 476, call it 475. It's probably going to be support. It's about halfway through these candles. I bet you there's going to be support. So the volatility stop would probably be pretty close. Those are all rational, yeah, Judy, rational areas to put it, but they're technically supportable. Everything we do with buys, targets, and stops have to be technically supportable. Just because I only want to lose or risk X percent or X dollars, it doesn't matter if there's not anything that's traded there that makes sense. Now let's go. So we're still sitting at $4.88, $4.89 right now. I'm on the delay, but it's probably still a viable stop. Now, how long are you going to let it go back? See, I'm one not wanting to give too much. In my nature, I'm not much of a swing trader. I'm a swing trader when it goes in my direction long. When it starts to pull back, I'll give it a little bit, then I'll cut my losses. And I can always get back in. I have very low commissions. But if this one gave me a caution signal like the shooting star and went below it, ain't no way that I'd still be in it. I'd be out at below 5. Great. I mean, but you're absolutely correct there, Eric, that the 465 level in that area under $4.75 is still a quite viable stop because Rick gives it a little bit more room than I do, and he gave it in all the way to these levels here. And if it breaks those levels, it's definitely dead. Now, let's look at one more thing before we move on. Let's look at the quad lines. How much of the retracement has gone there now? 50%. Would I say I like for my retracements to be no more than 50%? If this turns around tomorrow because the volume is really, really low here on a Friday, this could make an excellent J-hook. But if it does, then I would get back in if I were out. Or I would consider getting back in. Let's put it that way. So I think we've kind of gone over that one. If we need to come back to it, let me know. Let's go back to the slides, the presentation. There's rig. Nice move up, pull back, then a move up, and then the consolidation and a move up again. Now, I want to point out where rig got up there and did somewhat of a small shooting star, and it pulled back 3 days, then started to move higher. And one thing that happened is it got up to the dash green line. The dash green line in rig is 100. I've noticed on rounded bottom breakouts, if the distance between the 50 and the 200 is significant, and that number is not well defined by me right now, but if it's, say, 15 or 20%, because we're looking at an RBB as the difference between the 50 and the 200, if it's 20%, it's probably going to go half of that, and then and somewhere near the 100. And what I would do is I'd look to the left to see if there's a resistance level. And if I believe right, there was one. And then they tend to pull back, and they get their mojo back, and they go back up again. All right, let's go to the next one. Here we have a doji at the top of a run, and then it started to, the second day behind it, there's 3 candles. Up day before in a trend, doji, and then a down day the next that trades below the low of the doji day. That's basically telling me that it's going to pull back. I have no idea how far this is going to pull back. This could go down to 0 for all I know. I just know it's going to pull back and the trend is down. And I will get out and wait for a bullish signal before I would get back in. Now, let me stop and interrupt myself for one thing. There are buy signals and there are sell signals. And there are buy signals if you're bullish. But there's a buy signal if you were short and need to cover. There's a sell signal that's sell if you are long. And there's an additional sell signal for when you need to go short. And most of that is really in context of where we are. If I saw this doing a big run up here and I see the doji followed by the evening star pattern, is that a short to me? No, because it's in an uptrend. The trend is gone from where it was been from February to August. It's been in a downtrend, but it is no longer in a downtrend. We can tell that by the 3, 8, and 17. They're all above each other. It's just doing a natural pullback. Do not short stocks like this. When I see a sell signal, it's usually sell for somebody who's already in it, and a buy signal for somebody who's not already in it. Hopefully that's okay. Get to the dojis. They're either a reversal or a continuation pattern. They're a reversal if we have a bearish trend leading to the doji, and then we have higher prices after the doji. If we were in a bullish trend, have a doji, and then get lower prices after, that's a bearish reversal. Now, dojis, continuation. There are basically two types, but we trade them by essentially the same. You need pretty much a wide range bar or set of bars. This number one over here on the left could be 3 days that are all up, solidly up. And then we get to the point where we have a doji. And then the next day, I don't care exactly where we're over, but we continue to go higher that third day, or third candle. I'm going to go long above the high of bars 1 and 2, and I'm going to have a stop under the low of bar 3, the bar that brought me in. Because 1, it has no low wick, and because it had already gone and opened below the number 2, but the number 2 doji had already shown me strength that it basically closed where it opened. That was a sign of a pause. Now, let's take the second one over here on the right, where we have the same wide range bar on number 1. Then we have a weakish doji on number 2, where it closed at the low of the day and opened on the day 3, or candle number 3, pretty much level and started to rise. I would go long above candles 1 and 2. You'll have to decide how much above. A lot of it depends upon the price. If it's a $50 or $100 stock, you probably got to go 20 to 30 to 40 cents. If it's a $5 stock, maybe only a nickel, maybe 5 minutes. But here's the deal: when you're looking at number 2, where do I put the stop? I'm going to pick out the lower of the 2 or 3 because they were pretty close to one another. All right. And almost always I have to think, when I'm putting out a stop, what candle would I have to see? What candle pattern would I have to see? What price action would I have to see that would prove my thesis incorrect? If I thought it was going to go up and suddenly, let's see if this works. No, you can't see it. Never mind. If I went long over the highs of 1 and 2 on the far right-hand side on day 3, and instead of going up and closing at the high the way we show it, it suddenly closes lower than our entry, we're going to have either on bar 4 or bar 3, we're going to have a negative candle. I don't need to see any more confirmation than that, but I'm an extremely short-term trader. You guys may want to give it more. I don't. I don't like giving away my money. All right, continuation. This was a high wide range bar. Then we had 3 days that were sideways. Does this look like a pop out of the box, a put B? Yeah. A put B is nothing more than consolidation or continuation move, or potential continuation move. As soon as we gapped up above that, boom, you've got to be in GPS. It's going higher. And sure enough, volume came in, and what else helped me figure that one was going to be a good one? $11.60. I'm sorry, 11.6% of the float short. At some point, these guys are going to have to start covering if they haven't already. That adds fuel to the fire. Let's see what we got next. This was on the same chart that had 3 days of consolidation. I put it in a 2-day chart. And now you have the single doji continuation. You've got to be able to see these. Eventually, you'll be able to rationalize these into your mind. That's basically the same pattern. All right, did I? Doji reversals. Okay. We saw rig a minute ago and saw that as in a different time frame, and it went up. And there's the trend. I know it's only 3 days. It basically formed a doji like or near doji on the 11th, and then started to move higher. That's a bullish signal, and we check it when it gets back up to this $9 level. If it doesn't keep going, then it's going to fail. All right, I'll be right back with you there, Eric. Here is the doji reversal to the downside. We've got that. We've already covered that, but it's basically the same as what we've seen before. Consolidation patterns. Now, this is a little bit different because in this case, we're doing it over a period of days, but it's nothing more than if I change, let's say we're using daily. I've got 1, 2, 3, 4, 5, 6, and suddenly I go to a 3-day chart, 4-day chart, or a weekly chart. I'm going to see the consolidation. What is interesting to point out about this is that the resistance level is remaining the same. Every time we get up to this level, let's say it was $50 or 50 somewhere, within a few pennies, we keep running into sellers. The bears would keep pushing it down. But guess what? The bulls are winning the battle because the lows are getting higher and higher and higher every day. Then when it breaks out, it explodes to the upside because there are no more sellers. It's basically it's almost like you're chopping at the bottom of, you're under the water, there's ice right here at this resistance level, and you're chopping at it. You're chopping at the ceiling, and eventually you break through. And when you break through, you're out. It's being recorded. You're shouting again. Okay. General Motors, government motors right here, 4 days, and then it moved up. What was happening to the lows? By and large, we were having higher lows. Same equal highs. This is basically saying that they had a seller around 40 and a half to 41, kept running into it. Eventually, they ate up all the sellers. And what did it do? It exploded. Bullish and bearish engulfing. It will be pretty much over. Today, Evan pointed out that we had Select Medical Holdings Corporation with a bullish engulf. Well, is this a buy or not a buy? What else is there? Well, we had the trend going down into it. We basically are around the 50, and it looks like my stochastics are curling up from the bottom. It looks somewhat bullish here. It was bullish before. There are some negatives to it, and it's below the volatility stop. But with follow-through on this, if you don't get in today, if you wait to the follow-through, I can visualize where there's a trend line that it's going to break. And I'm going to go over to the screen share real quick and show you SEM. And let's show where the trend is. The trend is about where it stopped today. I tend to draw my trend lines where the bodies of the candles are. So we got up to basically that trend line resistance and stopped or paused. That doesn't mean that it's failed yet, because if we open higher tomorrow and move up, we could go to at least 19 and then maybe higher. But that's why Rick was asking Evan earlier, there's more to it than just that it's a bullish goal. All right, let's go back to the slides. ICHR. ICHR, Doji, bearish engulf, and then it went lower. It only went lower for 2 or 3 days, and then it resumed the move up. Let's do ICHR. I go back to the screen share, and you noticed in here that it was rising, It fell down to about the 50% level. It did a couple of dojis, and it started to rise. And then it did a bullish kicker. It went up over the prior swing levels and continued to go. Had high short interest. This was sweet. This was absolutely sweet. All right, let's go back to the slides again. Disney. You can see how Disney over on the left-hand side had a consolidation. When it broke through there, what happened on about the 9th of September? It had a nasty candle. Because it broke out of there, that's a poop out of the box. It went down and went down big. Okay. Then it did basically a bear flag over a period of time. And in fact, it actually did a rise all the way up to the 50-period moving average. That right there is the classic blue ice failure pattern. One second. The blue ice failure pattern, and then it started to roll over. And there is a bearish engulf after it got up here twice to this $101 level and then gave up. And where did it go to? It went down to the bottom here. And today is attempting the bottom. So I took my profits in Walt Disney Corp. Sold it, took it. I'm going to watch it for more to the downside. But right now, I said I got to a resistance. I saw something, and I'm reading my indicators and my technical patterns and saying this move to the downside is probably done. Doesn't mean it won't bounce. If it gets up to the 17 or the 8 and it rolls over again, I may go short again. But it has earnings coming up soon. All right. Now we're at a question. I'm going to go back to what Eric presented. Clearly, many members bought this trade idea. Okay, I'm going to have to ask you to copy that and ask Rick. He was the one for that. I wasn't actually following INAP, but